people dollarize from the bottom up. They find ways to get dollars and other assets, and everyone learns you just can't hold currency and bonds of this country, and so that country massively loses a lot of its seigniorage. And then extreme examples, the nation state itself will give up and just say, okay, we're gonna use the dollar as our currency. That's happened to a handful, and Bitcoin can do that to stronger currencies over time when it's bigger and more liquid. The longer this goes on, the more indebted these sovereigns get, and the less kind of reliable the currency is. And then the longer Bitcoin's around and trusted and understood, then the memes start writing themselves. Like, it just becomes understood that holding bonds and currency for the long run is stupid. And you have to hold scarcer things. And then it becomes, okay, what is the best scarce thing to hold? Gold's an option. It's a good option. Equities are an option, depending on what country you're in, what access you have, and what their current valuations are. And Bitcoin is so far an amazing option.
Lyn Alden's framework begins with a fundamental truth. Trust in fiat currencies erodes from the bottom up. As sovereign currencies debase and bonds become untrustworthy, citizens gradually shift to more reliable stores of value. Historically, the dollar, and increasingly, Bitcoin. Alden draws parallels between historical shifts in civilization and today's monetary transformation, arguing that we are in a transitional valley, a phase where progress in financial infrastructure creates friction before yielding tangible improvements. Much like early agriculture lowered quality of life before modern sanitation, fiat systems are sustained by delay, dysfunction, and inertia. But Bitcoin, she suggests, is the emerging settlement technology that may ultimately force a systemic realignment. The challenge is time, scale, and resilience in the face of entrenched interests.
Subscribe to Daily Bitcoin Trends for expert insights, real-time market updates, and proven crypto strategies. No hype, just smart analysis to help you make better decisions in crypto.
Oh yeah, Bitcoin at 2 trillion market cap is completely irrelevant for nation states being able to engage in war. We live in a world where there's about 1 quadrillion in total assets. So it's like 1,000 trillions. The U.S. bond market is 36 trillion right now, 37 trillion. Global sovereign bond markets are tens and tens of trillions, maybe 100 trillion. Global money supply is over 100 trillion. Bitcoin's a drop in the bucket. So right now, doesn't mean it's not solving a problem. I mean, if someone gets locked out of payment rails where they want to hold money that's not being debased, it's serving millions of people. But it's at its current scale, it has very little impact on nation states. Nothing short of being like 10 times or more bigger would start to affect that. Basically, when a meaningful percentage of the population would rather hold Bitcoin than hold a fiat currency, that's when it starts to matter. When it starts actually taking away seigniorage from the nation state, which doesn't happen at a $2 trillion market cap today. That's 0.2% of global assets. You need to start getting into the whole integers, at least. I mean, ideally double-digit integers. So basically, until it's kind of like a new foundational type of money at scale, then yeah, it's a different discussion. And these things inherently take time. You're going against an absolutely massive network effect. This is both a self-sustaining network effect, and then it's also a nation-state endorsed network effect. So it's absolutely massive. And this like open source network has to bootstrap from zero, and to the extent it's successful, it's going to take a very long time. And it can even take so long that people have to just kind of grow up with it and it's around, rather than making the active decision to transfer to it. One is, I wouldn't take it as a given. It's hard to predict exactly how large it's going to get. One thing I like to reference is Jeff Booth. He often phrases things as, if Bitcoin stays decentralized and secure, which is basically, so we're 16 years in this technology. It's been tested in multiple ways. It's very anti-fragile, but it's not necessarily invincible. So to the extent that Bitcoin as a network is not kind of corrupted, captured, neutered in some way, as long as it just kind of keeps functioning the way it has been, I expect it to keep taking market share up to a very high level, because it's as fast as fiat currency, but harder than gold, as long as, again, it continues to operate the way we expect it to. And so I do think that eventually it does eat into major nation state seigniorage, whether it's 100%, like it just completely invalidates the existence of fiat currency, or if it takes like half of it away by basically constraining them more, by giving them a much faster alternative that people can go to. That remains to be seen. We already, the closest thing we have today is like dollarization. So if a country just manages its currency terribly, people dollarize from the bottom up. They find ways to get dollars and other assets, and everyone learns you just can't hold currency and bonds of this country, and so that country massively loses a lot of its seniorage. And then extreme examples, the nation state itself will give up and just say, okay, we're gonna use the dollar as our currency. That's happened to a handful, and Bitcoin can do that to stronger currencies over time when it's bigger and more liquid. So we have a model in place, and we have this kind of long-term incentive to. There's really no reason to hold currency or bonds other than either one as the near-term working capital, like your checking account, basically to kind of pay bills in the current fiat era. It's like a hot potato. You use fiat currency, but don't really hold fiat currency. Or if you're a trader, sometimes it's a volatility reduction. That's why it's still useful, because it's stable, at least developed market currencies. So if you want to reduce volatility, it can be useful. But for the most part, it's not that useful. And as Bitcoin gets bigger and less volatile, it keeps eating into the reasons why you'd ever want to hold fiat currency for more than just a couple months worth of capital. Entities like the US and China have more runway than country XYZ that's a tenth of the size and more externally vulnerable. But the longer this goes on, the more indebted these sovereigns get, and the less kind of reliable the currency is. And then the longer Bitcoin's around and trusted and understood, then the memes start writing themselves. Like, it just becomes understood that holding bonds and currency for the long run is stupid. And you have to hold scarcer things. And then it becomes, okay, what is the best scarce thing to hold? Gold's an option. It's a good option. Equities are an option, depending on what country you're in, what access you have, and what their current valuations are. And Bitcoin is so far an amazing option. And so I think those things will eat into currency and bonds. And Bitcoin has the additional advantage, unlike equities and gold, that it can be used for money in the digital age.
Alden explains that Bitcoin, despite its revolutionary design, currently poses no systemic threat to major sovereigns due to its modest market cap, just 0.2% of global assets. However, its utility and trust continue to grow. As people experience the limits of fiat, currency debasement, debt overload, and eroding purchasing power, scarce assets like Bitcoin, gold, and selective equities rise in appeal. Unlike fiat, Bitcoin offers monetary finality. Unlike gold, it enables digital transfer, and unlike equities, it's not bound to jurisdiction or debt structures. This gives it a unique position in a world seeking sound money. She sees dollarization as an early template of what Bitcoin can replicate over time, displacing weaker currencies organically as people voluntarily adopt harder alternatives. As Bitcoin grows more liquid, understood, and trusted, it begins to eat into nation-state seigniorage, the privilege of issuing money. But for Bitcoin to reach that inflection point, it must expand tenfold or more, achieving true macro-scale impact.
The world became able to send IOUs around the world instantly. Gold was still very slow, so they levered it 20 to 1, basically. And then they just kind of dropped it entirely. And people went along with it. And even today, when currencies fail, people generally dollarize, they don't start trading around gold and silver as frequently. In extreme examples, they do, like Venezuela, they'll use a combination of dollars, local currency from neighboring countries, flick little pieces of gold and silver. They'll use kind of whatever they can in extreme environments. But basically, it's just not solving a fundamental problem for them, gold and silver. And so people want the speed of other things. So I think that's kind of the technological era that we're in, as weird as it is. The example I like to use sometimes is when people invented farming and we transitioned from hunter-gatherers to farming and cities, most evidence indicates that the average life expectancy went down. So there's a trade-off that the ones that were farming, they had more overall power because their numbers were incredible and they could just displace the hunter-gatherers, and they were able to, some of the people were able to start working on tools full time, and then technology kind of started building very quickly. So the civilization got a lot of power, but for the average individual, their teeth were rotting, they were just not as healthy, they were now crammed together and getting disease in a way they didn't before as frequently. And so it actually was a lower quality of life. And this lasted for thousands of years until they discovered hydrocarbons and use it to make like running water and like all and electricity, and then like basic medicines and germ theory, and then they kind of got out of that slump, that multi-thousand year slump, and they actually got life expectancies kind of really really high, higher than they were in the hunter gatherer era, and I think we're in that kind of valley now where when you get something that comes before something else, if you invent farming before you invent running water, you're going to have a rough time for a while, even though it's like a thing you have to kind of go through. And when you invent fast transactions with the telegraph, but you don't have fast settlement until Bitcoin is a century and a half later, you're going to have a problem. And you solved one problem, but you invented another for yourself. That's the world we live in. And even though Bitcoin exists now, like I said, when it's under a $2 trillion, market cap or so, it's still in the nation state's court. It's still the central bank's court right now. So it's still, until it becomes so big that it actually rivals the size of that existing system, we're still in that era where most people are on a fiat standard. And so we're in that kind of valley. And so in that valley, things can seem unintuitive, like people living shorter lives than their hunter-gatherer counterparts, despite having ostensibly better technology. And today, it's like, why are we using government debt as assets? Well, because we're in this weird valley of time where they can justify it. Do any of the people that run the system want to do it? And then even the voters, if they say they want to do it, but then it's like, well, okay, so we're going to do austerity now, and your Social Security checks are going to get clipped. And like, well, no, I don't want that. I just want the good side, not the downside. I don't want anything to happen to me. And so between the voters and the politicians, the fiat currency debasement is kind of the release valve. So as they fail to agree with each other on how much to tax, how much to spend, the error just gets kind of invisibly debased and argued over, and kind of the impacts happen with a delay. So I think nothing short of a forcing function is needed, which is basically it's going to keep happening until something forces them otherwise. Which is to say, until there's something really powerful in their face, like Bitcoin is 10 times bigger than it is now or something, they're going to keep doing it.
In Alden's view, the continued survival of fiat regimes relies on systemic denial, voters unwilling to bear austerity, and policymakers unwilling to impose discipline. The debasement of currency becomes the invisible release valve, a mechanism to avoid painful political choices. Bitcoin's role, then, is not just technological, but profoundly political and evolutionary. Until a forcing function, such as Bitcoin reaching $20 trillion or a major sovereign default emerges, the fiat system will persist in this liminal phase. We are still in the valley, where outdated assumptions dominate, even as the future creeps in. Much like early civilizations endured suffering before breakthroughs in public health, today's financial system is in a diseased state, waiting for new infrastructure to mature. Alden's analysis doesn't guarantee Bitcoin dominance, but outlines the precise conditions under which it can happen, through resilience, scale, and superior monetary properties. The longer fiat mismanagement continues, the more inevitable Bitcoin's rise becomes.